Picking a Forex broker feels like guesswork. 6 checks fix that. Here's the framework in order.
Step 1. Regulation. And not is it regulated? Every broker says yes. The real question is who regulates it. Tier 1 means 6 names. FCA in the UK, ASIC in Australia, the NFA and CFTC in the US, FINMA in Switzerland, BaFin in Germany, MAS in Singapore. Those 6 enforce capital requirements, client money segregation, audit trails, and compensation schemes. Real teeth. Tier 2 is mixed. CySEC out of Cyprus is genuine EU passported regulation. Flawed, but real. FSCA in South Africa, JFSA in Japan, the FMA in New Zealand, they exist, but enforcement is materially weaker. And then there's everything else. Vanuatu VFSC, Mauritius FSC, St. Vincent, whose own regulator says explicitly that it does not regulate Forex. Read that again. The regulator itself disclaims regulating the thing the broker is using its name to advertise. That's not a license. It's marketing dressed up as oversight. If anything goes wrong, assume zero recourse. Here's the actionable check. Find the license number on the broker's site. Search it on the regulator's own register, fca.org.uk/register, asic.gov.au, the real source. Then verify the legal entity name matches what's on your deposit receipt. If any of those 3 steps fails, walk away. No exceptions. That's filter 1. It eliminates more bad brokers than the next 5 steps combined, but it doesn't tell you what trading there actually costs. And there's one step further down this list that costs you about $100 to run and tells you more than any review on the internet. We'll get to it. Step 2. Total cost. Because zero commission is a marketing phrase, the real cost has 4 layers, and you need all 4. Layer 1. Spread. The number on the marketing page is the best case spread at peak liquidity. To see your actual spread, watch the live tick chart during the London-New York overlap. That's the number that matters. Layer 2. Commission. ECN brokers charge $3 to $7 per standard lot round turn for raw spreads. Standard accounts bundle the commission into a wider spread instead. Neither is automatically cheaper. Do the math on your average trade size. Layer 3. Swap. The overnight financing cost. If you scalp intraday, ignore it. If you hold overnight or run carry trades, it quietly becomes your biggest expense. Layer 4. Non-trading fees. Inactivity, withdrawal, deposit fees on cards or crypto, FX conversion. Plus 500 charges $10 a month after 90 days of no activity. Pepperstone charges nothing. Same industry, completely different cost profile. Here's the signal. A cost-transparent broker publishes all 4 on a single page. If you have to email support to find out the withdrawal fee, that's not customer service, that's a tell. So is from 0 pips without average data. So is contact us for active trader rates. That covers what they charge. Now where you actually trade. Step 3. Platform fit. And the rule here is simple. Do not switch how you trade to fit a broker. Match the broker to how you already trade. MT4 is for discretionary traders, the legacy EA ecosystem, and runs on anything. MT5 is multi-asset, newer EAs, depth of market built in. C-Trader is for scalpers who want tighter fills and a proper level 2 order book. TradingView integration matters if TradingView is already where you chart. 8cap and Pepperstone are the strong fits there. And proprietary platforms, Plus 500, eToro, usually mean the broker is built for beginners. Not inferior, just different. The mistake is opening a C-Trader account because you read it's the pro choice when you've never used a level 2 book in your life. Pick the platform you'll actually use, not the one that sounds impressive. Step 4. This is the one I told you about. Test a withdrawal before you fund seriously. Deposit the minimum, wait 24 hours, then withdraw a portion, and measure 3 things. How long it takes. ACH runs 1 to 3 days, cards 2 to 7, wire 1 to 2. Whether the broker suddenly asks for extra documentation after you request the withdrawal, and whether you're forced to close open positions first. Here's why this matters more than any review. The deposit side is always smooth. They want your money coming in. The withdrawal side is where the broker's real character shows up. A broker that's slow or difficult at $100 will be catastrophic at $10,000. And almost no retail trader runs this test before scaling up. It costs you the wire fee, maybe 20 bucks. It's the single highest leverage check you'll ever run on a broker. Withdrawals tell you how a broker treats your money. Step 5 tells you how they treat you at 3 a.m. when something is on fire. Time the support. Not at 2 p.m. on a Tuesday. That's their best window. Open a live chat at a non-trivial hour. Weekend, 3 in the morning local time. Ask a real question, not what are your hours. Something like, how is swap calculated on gold against the dollar? Then time it. Anything over 5 minutes for chat at a normal hour is a red flag. Anything over 24 hours for email, same. The reason is simple. You will eventually have a margin call at midnight. That's when you find out whether the support team actually exists. Test it before you need it, not after. That's the survival kit. Step 6 is the optional layer, the extras, and honestly is the operative word. Copy trading on eToro is genuinely valuable if you actually intend to copy traders, not if you just imagine one day you will. Education from XM or AvaTrade counts if it's structured. It doesn't count if it's a dumping ground of generic PDFs. Research splits the same way. A daily analyst note is useful, an auto-generated headline feed is filler. In the mobile app, every broker claims theirs is great. Download it, use it for a week before you commit. One last thing, the 5 traps that catch beginners. Optimizing on spread alone and ignoring regulation. Trusting a YouTube affiliate review without checking the reviewer's disclosure. Believing the welcome bonus is free money. The turnover requirements almost always cost more than the bonus itself. Picking an offshore broker for the high leverage. The offshore regulator is decorative. Your real protection is whatever the broker feels like giving you. And skipping the withdrawal test. So here's the framework, top to bottom. Regulation first. Tier 1 or genuine Tier 2, verified on the regulator's own register. Then total cost, spread, commission, swap, and inactivity, all visible on one page. Then platform fit to how you already trade. Then the small withdrawal test. Then support, timed at an awkward hour. Then the extras, honestly. And remember the step I flagged at the start, the one that costs about $100 and tells you more than any review on the internet? That's step 4, the withdrawal test. Because every broker can write a great marketing page. Almost none can pass a $100 withdrawal stress test without showing you exactly how they're going to behave at 10,000. Run the filter in order, before you fund, not after.
Run the filter in order before you fund, not after. Full breakdown and link in the description.